Yes, and we are live. Nice. Thank you so much for watching the 𝗲𝗂𝗍𝗀 real estate community. Another Tuesday, another live interview. Wait, I'm gonna do this because I can hear my echo. That's it. Yes, so Tuesday, as every Tuesday, you know that at 6 o'clock we're going live, and I always bring an expert or somebody that can help you and can give you another insight in this process of purchasing real estate here, of relocating, of living here in this amazing area in the Riviera Maya. Today I'm bringing Ruby Chouhan that I'm going to introduce her just in a few minutes after I'll see people are joining us. Just to let you know, don't forget that all our interviews, the past interviews, you can watch on the features. If you go to the main menu on this group, go to features and you can see all the past interviews that we had with Carlos Ladron that gave so much information and amazing tips about how to flip and how to invest. And then we had the lawyer, Sandra Pina, that also was very, very helpful. And we had Vacasa that Ivan came and just gave us a lot of information about how to rent your house and how to use a property management. So you can find all those interviews and more in the feature menu. Okay. I'm just going to see here on my phone that I can see it. Yes, good. Perfect. Okay, so I'm so happy, Ruby, that you could join us after so long that we've been trying to schedule this. How are you, first of all?
First of all, thank you so much for having me, Hagar. It's been great, being in conversation and helping each other's clients the past year or so. I'm doing very well, thank you. And how are you?
I'm doing very well, thank you. Well, I'm in the Riviera Maya, so what can go wrong?
That is true. And I'm back in Toronto, where it's still a bit cold, even though we're at the end of April. So, I would much rather be in Mexico right now than Toronto, Canada.
Yeah. So in January, we are going to talk about tax implications for Canadians. Before everything, I'm just going to comment that I think that it can help also other people that are not Canadians, but we will discuss this further on, correct?
Yes, absolutely. So allow me to introduce myself and our firm and what we do and how we can help individuals. So my name is Ruby Chouhan, as Hagar mentioned. I'm co-founder of 𝗧𝘅 Global Tax Professional Corporation. We're a boutique Canadian tax firm specialized in helping non-residents and Canadian expats with departure, tax, residency, arrival, and post-departure tax implications like earning rental income from abroad, pension income, etc. So we help individuals move abroad and those who already live abroad with the specialized area of non-resident tax. And many countries have similar tax rules. So of course, it's very important to speak with the tax experts of the country you're from, but some rules do apply that are similar to Canadian tax implications to others as well.
Okay. Now, I see it from my side here in the Riviera Maya, here in Mexico. I see a lot of Canadians that are moving or traveling from Canada out. Do you see this movement as well from your point of view?
This is a really good question. Yes, absolutely. And especially within the past, I would say 2 to 4 years. So at our firm, we speak with individuals every single day who are living across the world. We help many, many Canadians from all across Canada move to, we often see Mexico, France, Qatar, UAE, Spain. And there seems to be a very large exodus right now of Canadians for many different reasons. One, our climate is pretty cold here. The main reason I would say taxes are extremely high. We have one of the highest tax brackets, tax rates across the world. So essentially, the more money you make in Canada, the more you're taxed. Some other reasons is also our healthcare. Even though it's free, it's not the best generally. And, it can take a long time to see our doctors. And also one of the main reasons is community. And I know it's the main reason many individuals move to Mexico. You know, they are within their community. People visit each other often. They really enjoy life and the outdoors and things like that. So definitely so many Canadians are moving all across the world. And in today's modern day and age, it's pretty easy to move abroad, whether it's just for a few years or long term. So definitely it's happening a lot.
Okay, so for this, after you describe this movement out of Canada, so you've been traveling or you've been living out of Canada for a while. So as a Canadian that is living and working and spending time out of Canada, how do you know, at what point do you know that you're that you're not longer considered to be a resident, and how can it implicate when we're talking about taxes?
Yeah, this is a really good question because, you know, taxes can be a really scary subject. And especially if you leave Canada and you start living somewhere else for a year, 2 years, you don't want to deal with taxes again. But it's really crucial that your tax filings are filed correctly, that if you are a non-resident, that you exit the Canadian tax system and you inform the government. And also when someone becomes a non-resident for tax purposes, it's really important to do the correct filings because there's different disclosures that need to be made about investments, real estate, fair market value, and failing to make those disclosures can result in penalties of over $2,500 per taxpayer. And so in today's day and age, like I mentioned before, people are living in multiple countries. People are living a few years in one country or another, or they own homes in multiple countries. And it can be really difficult to figure out someone's non-resident tax status. And what I would say is someone's entire situation needs to be looked at because it's not black and white. In Canada, when we look at tax residency status, we look at primary ties, secondary ties, meaning where is your family, where do you live long term, where are you a member of associations, et cetera, et cetera. So depending on your primary ties, secondary ties, and looking at your whole situation, we would determine when you became a non-resident for tax purposes. What does that mean for your situation? Meaning, if you have investments in Canada, can you still keep them? Can you still invest in those investing tools like TFSA, RRSP, Lira accounts, etc.? Or what happens with your real estate? You know, many times when someone moves away from Canada, let's say they want to live in Mexico, they don't usually sell their Canadian property. They want to keep it long term. So they turn it into a rental property. We have to discuss what are the rules and tax implications of a non-resident earning rental income or pension income or retirement income, investment income, because those rules are different than if you were a tax resident of Canada. So all of those things need to be looked at and considered so that you can, you know, really cross your T's, dot your I's, and do the correct items. And also because when you become a non-resident for tax purposes, there's multiple divisions of the CRA, Canada Revenue Agency, which is our taxing authority, that come into play. So one division deals with tax filings, whereas another division, they entirely look after non-resident income, and they have special tax withholding rules for non-resident income. So all of those criteria need to be met and done correctly. So we help plan all of that for, especially when someone's planning their departure. Usually that's step one. If you're planning to leave Mexico, they reach out to us. We have an initial conversation to go over their situation. We do an in-depth tax consultation so they can figure out the differences of residence versus being a non-resident. And then afterwards, let's say they leave Canada, we would help with we call it the part-year Canadian tax return, which helps them exit out of the Canadian tax system. It's a little bit different than a regular tax return because it has different disclosures, etc. And then afterwards, if they are still earning some sort of Canadian income, such as rental income or investment income, we would help with those post-departure tax implications for non-resident items. Yeah.
Okay, that was a lot of information. And guys, you know that I usually bring a paper and a pen, and I always take notes. I really hope that you take notes. And if you didn't take notes, just remember that you can replay this. Just watch again and again as many times as you like this interview if you didn't catch it correctly. You mentioned something very, very important about taxes or income back home in Canada while you are not in Canada. So, for example, let's say that they are still have a home and they're renting it or any other income. So, how does it implicate for tax?
That's a really good question. And I'm going to actually add to that. So I'm going to break it into two parts. Part one, often when people leave their home, that home has been their principal residence for a number of years. And in Canada, when a property is your principal residence, when you eventually sell, you get a principal residence exemption, meaning you don't have to pay tax on the sale because you lived in it as your primary home. It wasn't making money. It wasn't operating as a rental property or a rental business, right? Now, let's say when someone leaves Canada, they've converted it from a principal residence to a rental income producing property. Whether someone leaves Canada or not, and they are a resident and they turn into a rental property, there's actually an election that can be filed with a tax return, and most Canadians are not aware of this election. It's called a 45-2 election, and it actually defers the change in use from principal residence to rental property, meaning that for a certain number of years, you can still get the principal residence exemption, so you're paying less tax on the eventual sale for capital gains. Now, when you are no longer living in the property as your principal residence, you normally that's when capital gains starts because you no longer have that principal residence exemption. So that's item one I would mention. There's an election that can be filed to help defer capital gains. Item two, so as a non-resident who's earning rental income, there's two different divisions at the CRA, Canada Revenue Agency, that come into play for you. One is called the Individuals Division. That's associated with your tax returns and social insurance number. Then there's another division called Part 13, a non-resident tax. So this non-resident division, they require that anybody earning rental income withholds tax up front and pays it to the CRA. The reason they have these rules for non-residents is because, they worry you're anywhere in the world and you're not going to file a tax return. So they want to make sure some tax is withheld up front. So the CRA gives two options. The first option we call the gross method, where I would say less than 5% of people across the world go with this method. This is the default method. You're required as a non-resident to pay 25% of the gross rent every single month to the CRA to a designated non-resident account. So every single month you're paying 25%. Once the year is over, you receive a non-resident tax slip. That non-resident tax slip will indicate how much tax you withheld under which non-resident account. Then Part 3, CRA gives you up to 2 years to file a specific tax return for non-residents only that only reports rental income and expenses, because at this point, you're a non-resident, so they don't care about your worldwide income. They only care about the Canadian income. They give you 2 years to file this tax return because you've paid so much tax, 25% of the gross rent. So they're not in a rush to refund you. And you'll always be in a refund position because you just paid too much tax. So that's option one. Most people don't go with that option. The only benefit is that you have up to 2 years to file your tax return in case, you go missing for a bit or you don't want to deal with taxes. Option two, you can submit something called a Form NR6, which allows you to pay reduced taxes based on 25% of your estimated net income. So to submit this NR6 form, you have to have a third party, such as our accounting firm. We're registered as non-resident tax withholding agents. And ideally, the form is submitted as early as possible in the year. Our firm actually starts preparing in October so that our clients are approved January 1st for the whole year, because the form can't be backdated and the taxpayer has to pay 25% of the gross rent until it's filed. So essentially, we prepare this NR6 form. It's almost like a pro forma tax return. If you estimate you're going to earn $0 in rental income, maybe you have more expenses than the income, you can end up paying $0 in tax upfront compared to that 25% gross, which is a huge difference, or pay very little based on your estimated net income. So this process is broken down into 3 parts. Part 1, NR6 form is filed. Any payment is made to our non-resident account. The rest of the year, the client doesn't have to worry about payments or forms. We put our mailing address, we make sure it's approved correctly, and we make any payment. The following year, we prepare an NR4 slip, non-resident tax slip, and it'll say that the client taxpayer had an exemption to pay less tax, and it'll say any tax they paid. Part 3, this is where it gets a little bit different. Because the CRA allowed you to pay less tax, they want to make sure you file a tax return on time. So they have a very strict deadline of June 30th of the following year. And if you fail to file your tax return by June 30th, your Canadian tax withholding agent, such as our tax firm, receives an assessment of 25% of the gross rent plus arrears interest. So the process is very in-depth, and we manage the entire process comprehensively. We make sure nothing is filed late. We don't want our clients to get penalties. We don't want to get penalties on behalf of our client. And essentially, that's the process. I wouldn't say it's a lot more costly to have a rental property as a non-resident. It's just that there's these tax withholding rules exist.
Wow, that was so much information. I can see that 𝗘𝘃𝗲𝗿𝗃𝗲, she's watching us. You can see her as a Facebook user, but I can see that it's 𝗘𝘃𝗲. Thank you so much, 𝗘𝘃𝗲, for watching us. Ruby, can you read out loud the question? Can you see the question that?
Okay, I see it. We sold everything we own and became temporary residents in Mexico in 2021. My husband still works in Canada, a tradesman between 6 to 9 months of the year, traveling back and forth. Can we cut ties with Canada now and be taxed in Mexico as opposed to Canada? Is this something his employer will decide? We obviously want to pay less tax, and I've heard Mexico taxes are as low as 2.9%. So in this situation, I say, 𝗘𝘃𝗲, reach out to me. Let's have an initial call because I want to gather more details about your whole situation, about where you mostly live, where you earn income, both of you, where do you have homes, etc. And then we can go from there. But we can definitely help you, give you advice on maybe the best way to structure your situation, how you can be considered non-residents of Canada. And to add to that, I will say that there are many non-residents across the world that still earn some employment income in Canada. So you can still be a non-resident of Canada and earn employment income, but we need to look at your whole situation to determine if you would be considered a non-resident of Canada for tax purposes or a tax resident of Canada. So 𝗘𝘃𝗲, we'll put our contact information at the end of this, and then we can connect one-on-one.
Amazing. So how you become non-resident? This is something automatically after a while that you're not living, or you need to do this and declare that you're not a resident?
You would need to declare it. So actually, this is a good question because there's a questionnaire that many individuals fill out. It's called the NR73 questionnaire to determine non-residency status. At our tax firm, we have a position not to fill out that questionnaire because it's a long form with about, I believe, 70 to 100 questions. And depending on how you answer those questions, the CRA agent who's reviewing the form might mistakenly mark you as as a tax resident or non-resident versus another. So, and also they take over a year to respond to that. So if they're not responding and then you're missing out on your non-resident tax withholdings or other filing requirements, you're going to have to face penalties, etc. And that response they give you is just an opinion, meaning if their opinion is wrong and you filed the wrong tax returns or did the wrong items, you're still going to be penalized and earn interest and all these different things. So that's why someone's whole situation needs to be looked at. And then let's say they have become a non-resident for tax purposes. At that point, we would file something we call it the part year Canadian tax return. It's different than a regular tax return. It has disclosures about your real estate ownership, fair market value, investments, assets, foreign property ownership, and a whole number of different things for the CRA to update in their system. And once it's processed, the CRA would mark that person as an immigrant, as a non-resident, meaning they're no longer issuing, let's say, Ontario sales tax credit or child care benefits that are not deemed for non-residents. So that's essentially the process of that. And then if that individual is earning, let's say, rental income or other sorts of income, we would discuss with that individual what filing requirements exist for that non-resident income. And, with Hagar, I understand you work with so many Canadians. Our tax firm is happy to set up an initial call at no cost to learn about an individual situation, discuss next steps. So we welcome reaching out to us. We're a boutique tax firm, so we're a little bit smaller than, let's say, a corporate tax firm. So you end up knowing the individuals that you work with, you can rely on them and they know your situation well, versus you being passed around to 10 different people or taking 2-3 weeks to speak to someone. And to add to that, our firm's tagline actually is a personal approach. So we're happy to set up that initial call and really learn about someone's situation. And then hopefully we're a good fit and we can work together.
Amazing. So after all, this is a real estate Facebook group, and I opened this Facebook group to help investors that want to invest in Mexico. So I want to address this issue. So let's say that they want to buy here and invest here in Mexico. So do they need to declare their taxes when it comes to invest here and also when it comes to have an income here?
That's a good question. So in this example, we're imagining the person still lives in Canada. Maybe they visit Mexico. They're a tax resident of Canada, but they've decided to invest in foreign property in Mexico, right? Yeah. So in this situation, because you're a tax resident of Canada, you're required to disclose foreign ownership of property. So if you own property that's worth over $100,000 Canadian, you have to disclose that on a specific form. It's called 𝗘𝘃𝗲𝗵. On top of that, you have to disclose your rental income. So there is a part of the tax return where you disclose rental income, and you're also allowed to report your rental expenses related to that rental income in Mexico. So as an example, maintenance and repairs, property taxes, mortgage interest, insurance, many home-related expenses are tax deductible. And then in Canada, you would pay tax on the net rental income. However, if someone is paying tax in Mexico as well, because I'm sure if they're earning rental income in Mexico, they're going to have to report that to the Mexican tax authorities. So if they pay tax in Mexico on that rental income as well, we can input a foreign tax credit for the tax they already paid, so they're not double taxed. And that's why tax treaties and tax conventions exist, so there's no double taxation. However, if Canada's tax rate is higher than Mexico's, they will have to pay some sort of difference in the tax payment to 𝗖𝗍 to Canada.
Okay, that's super important and interesting, because I always give from my point of view as a realtor just tips that I think that help, but this is very, very helpful from my point of view as a realtor. And for all of you who are watching either the live stream or the replay, I really, really hope that you find this information helpful, and you can comment below, makes sense or helpful, just for us to know that we are giving you some value here. So Ruby, you mentioned some kind of, I will call it some kind of a giveaway for our viewers for this inner circle of this Facebook group. If you can give more information about this.
Yeah, absolutely. So we're happy to provide a 10% discount on our fees to anyone part of the Facebook group. If you reach out to us, mention the Facebook group or Hagar's name, we're happy to add a 10% discount on our fees. Normally, so actually our firm, we're part of Canadian Business Council. So for example, the Canadian Business Council of Dubai and North Emirates. And sometimes we have these special incentives for groups across the world. So we're very happy to provide you with this incentive. And of course, reach out to us for an initial call. Whether you require our services now or in the future, we're very happy to help. Canadian tax is, when it comes to non-resident taxes, it's very niche. So whether it's our firm or another firm, we always recommend speaking with tax experts in that international scope, because regular Canadian tax firms, they may never deal with non-resident items. And you want to make sure that everything is done correctly when you do become a non-resident for tax purposes.
Thank you so much. Thank you so much. Guys, if you have more questions, so you can comment below your questions, because after all, this is for you. But anyway, Ruby is still monitoring this live. And if you have more questions and you just watched it after or the replay and you have questions, so Ruby can monitor this and she can answer directly by texting you, or I think it will be more helpful, Ruby, that if you get more questions publicly, so also answer publicly, because in the end everybody have questions and that can help other people with the same issues.
Yeah, please write them in the Facebook group. And also our website is www.𝗲60global.tax.ca. You can always reach out to me. I'll leave my contact information. It's also ruby.chouhan, 𝗧𝘅 at 𝗲60global.tax.ca. And keep a lookout for more webinars. Feel free to add me on LinkedIn or Facebook, etc. We're always trying to put out content regarding Canadian taxes, because it is hard to find information on non-resident taxes. And thank you so much, Hagar, again, for having this conversation with me, because tax is a crucial part of everyone's existence. Unfortunately or fortunately, it's something we can't get away from. So we're here to help.
Amazing. Thank you so much for coming and spending this amazing time with us, Ruby. We will definitely stay in touch. For all of you who are watching the live or the replay, thank you so much for engaging with us and commenting on this. And I really, really hope that you get all the information that you need. And if not, just comment below and Ruby will reach out to you directly. Thank you so much. And that was amazing.
Thank
Bye-bye,
you.
Ruby.
Bye. Take care.
Bye-bye.